Hello viewers, welcome to my channel. I am Hasham Ali Khan. So now I am continuing the discussion on raising capital. Last video I have explained you the meaning of the term raising capital, financial market, functions of financial market, types of financial market. That I have already discussed in the last video. In this video I am going to explain you about the regulations of financial market. Remember, financial markets are completely regulated. Then only the people will have confidence in making the investment in the capital market, financial market. So what are the regulatory bodies which will regulate all these financial markets? I'm going to explain you in detail. So watch the video till the end, because examination very frequently they will ask the question regarding the regulation of financial markets. So before starting the discussion, take the screenshot of the points which are written on the board, then I'll explain all the points in detail. Now, the topic is regulation of financial markets. Financial market is a market where the funds are borrowed and lended. Some people want the fund and some people want to invest the fund. So the market where all the borrowers and lenders will meet, that is called financial market. And it is fully regulated market. If there is no regulation control, then what will happen? The people will lose the confidence in financial market. Nobody will come forward to invest in capital market. When there is no capital market, definitely there will be no economic development. So for economic development, capital market is the backbone of the economy. Now, the functioning of financial market are fully regulated by several legislations. Number of acts are there. Legislations have been passed in order to control and regulate the financial markets. Then the regulators of financial market lay down specific rules for the participants in the financial system. In the whole financial system, so many participants are there. Some are borrowers and some are lenders. And how they should behave, what are the rules and regulations they have to follow. So all these rules and regulations which govern the behavior of the participants in financial market have been laid down through legislation. In India, securities market are regulated by various agencies, particularly in India. Every country we have regulated this financial market. In India, the regulatory bodies are, first one, Department of Economic Affairs. The central government will have one department. That department is called Department of Economic Affairs. Another department for Company Affairs, and the RBI, Reserve Bank of India. These three are the main, authorities which will enact the laws. Then the capital markets are protections of investors. The capital markets and protection of investors is now primarily the responsibilities of SEBI. Investors' interest, the functioning of the capital market and the investors' protection of the interest of investors is the primary responsibility of an act called SEBI. Securities and Exchange Board of India. I'll explain you in detail. But time being, you remember SEBI, Securities and Exchange Board of India. This is the authority which regulate the functioning of the capital market, and it has the responsibility of safeguarding the interest of the investors. And insurance comes under Insurance Regulatory and Development Authority of India. Second segment of this financial market is insurance. And all the insurance will be controlled, governed, regulated by IRDA, Insurance and Regulatory Development Authority of India. And lastly, the activities of these agencies are coordinated by a high-level committee. So the structure, the hierarchy is all these departments, that is SEBI, IRDA, PFRDA, All these are regulated by a high level committee and on capital and financial markets, which discusses various policy level issues. So this high level committee, the high level committee will discuss all the all the policy issues regarding this capital and financial market. The committee is chaired by the governor of RBI and secretary of Ministry of Finance, and SEBI chairperson, IRDA chairperson and PFRDA chairperson are the members of the committee. This committee is responsible for controlling, regulating the capital and financial market in India. Next, one by one authority we will study. The first regulatory body is RBI, Reserve Bank of India. This is the apex monetary institution in India which regulates the complete monetary and banking system. So it is the apex monetary institution in India. The highest banking authority in India is RBI. It is a banker's bank. It is a controlling authority of all the banking system in India. The RBI plays an important role in regulating the financial system. How? Issuing licenses to banks. In India, no bank can function, no financial institution can function without taking the license from RBI, without permission from RBI. Secondly, regulating the banking system. Remember, the banking system is the backbone of the economy. The complete economy depends on the banking system. So RBI have the authority to control the complete banking sector and overseeing the internal and external reconstruction of financial companies. The people will have confidence in the financial system. So it is a responsibility of the RBI. It is the role of the RBI to make internal and external reconstruction of financial institutions. Because financial institutions may also suffer from a number of problems. It is the responsibility of RBI to come to their rescue and help them internally and externally to revive those organizations. Next, regulating the payment and settlement system and infrastructure. Number of transactions will take place between different banks. So this payments and settlement system among different banks, it is the responsibility of RBI to make complete infrastructure where the transaction between different banks should be settled. Then next one, control the money supply. The money supply. See here, the inflation depends on the money supply. If there is excessive money supply, then what will happen? The value of money will come down. The purchasing power of money will come down. So if there is shortage of money, again it will be a problem. Inflation will arise. So in order to control the monetary supply, the RBI has the responsibility to control the money supply. Next one is monitoring key indicators like GDP and inflation. The economic development will be measured through GDP and inflation, that is increasing the price level changes. So RBI should have a close watch on these indicators of economic development, GDP as well as inflation, and maintaining people's confidence in the banking and financial system. Remember, the people will come forward and invest the money in the bank only when the people are having confidence, trust in the banking system. If the people lose the trust in the banking system, nobody will come forward to invest the money in the bank. Then the bankers will not have sufficient funds to lend the money. Then complete banking system, capital market system will collapse. So RBI has the responsibility, role to play, that people's confidence should be maintained in the financial system and the banking system. Next one, formulation of monetary policies such as inflation control, bank credit and interest rate. Number of financial policies will be framed by the RBI, like inflation, interest rate policy, credit bank credit policies. For making all these policies, it is the responsibility of the RBI. So in other words, we can say RBI is the highest authority to control the financial markets in India. The financial markets are fully regulated by RBI. Secondly, Securities and Exchange Board of India. In short, we will call it as SEBI. This is also one of the biggest authority to control the capital market and financial market in India. So when it was formed, I am going to explain you, it is the regulatory body for securities market. Securities means stock, bonds, debentures, and foreign currency, derivatives, etc. These are all the securities. So to regulate the securities, this SEBI was formed. Then SEBI was established in 1988. Actually, SEBI was established in 1988, but it started functioning from 1992. It got a legal status in 1992 to regulate the functions of securities market and to keep a check on the malpractices and protect the investors. The security market depends on the trust and confidence of the investors. So the SEBI was formed and given the authority to regulate the functioning of the securities market and to protect the interest of the investors. Then the capital market is regulated by SEBI. So presently in India, the complete capital market will be regulated by SEBI. It has a full autonomy authority to regulate and develop capital market. The government has given full authority to SEBI to regulate and control the capital market in India. The role of SEBI is, the first one, protect the interest of the investors. Just now I told you, the development functioning of the financial market, capital market depends on the confidence of the investors. If the investors have high level confidence in the capital market, that means investment will increase, development will increase. So SEBI has the responsibility, a role to play to protect the interest of the investors. Second, regulate and control the business on stock exchanges and other security markets. Stock exchange is a market for secondary securities, secondary exchange. So this SEBI will have a role to play in the functioning of the stock exchanges and also other securities market. So it will regulate, it will control the business in stock exchanges. Regulation of intermediaries. There are a number of brokers between the investors and borrowers, and these brokers are the intermediaries to bring together face to face the borrowers and the lenders. So what are the functions, how the investors should act, what are the functions of the intermediaries, that will be decided by the SEBI. That means the activities of intermediaries will be regulated by SEBI. Next one is prevent fraud and capital market. By making all these legislation, rules, regulations by this SEBI, the fraud will be prevented. It is difficult to conduct the fraud because so many rules, regulations are there. So prevention of fraud. The next one is audit the performance of the capital market. Time to time, the SEBI will conduct the audit of the performance in the stock exchanges. Whether stock exchanges are performing in a transparent manner or not. This is the role of SEBI. So I have discussed you about the highest authority, that is RBI, and this next authority is SEBI for regulating the financial markets. The next regulatory body is IRDA, Insurance Regulatory and Development Authority in India. Insurance Regulatory and Development Authority of India. Short form, it is called IRDA. This is also one of the regulatory body in the financial market. How IRDA will regulate the financial market, we'll see. It's an autonomous apex statutory body for regulating and developing the insurance in India. So this IRDA is formed to regulate and control the insurance business in India. Now insurance business is growing. Many people are taking insurance policies, making investment in insurance companies. So there should be some regulatory body to control the insurance business. For that purpose, IRDA was formed. It was established in 1999 through an act in Indian Parliament. An act was passed, IRDA Act, in 1999. Then IRDA regulates and promotes insurance business in India. So its area of operation is only in one activity, that is insurance. And role of IRDA, what role it plays in the financial market? Granting, renewing or cancelling the license of insurance company. Without getting the license, no insurance company can be formed. No business can do insurance activity without taking the license from IRDA. So granting the license, cancelling the license, renewing the license. This is the role of IRDA. Secondly, imposing penalties under IRDA. Suppose if there is a violation of law, then IRDA will impose penalty on the insurance companies. Next one is conducting inspection and investigation of insurance companies. Time to time, the functioning of insurance companies will be investigated and inspected by the IRDA. Then issuing regulations for intermediaries. Again, the insurance business will be done through intermediaries like agents. So many insurance agents are there which will help the people in taking the insurance policies, in explaining the people regarding the benefits of insurance. So how the intermediaries should behave, what are the functions to be performed, how the functions should be performed by the intermediaries. That is the role of IRDA. Next, protecting the interest of policyholders. The people who take insurance policy are called policyholders. So IRDA will protect the interest of the policyholders. If the interests are protected, then more and more people can come and have confidence in the insurance company and they can be able to invest the money. So this is the role played by IRDA in India. Next one is PFRDA, that is Provident Fund or Pension Fund. So Provident Fund Regulatory and Development Authority. Just like insurance, we have Provident Fund. What is this? It was established in October 2003 and by the government of India. Just like IRDA, it was formed in 1999 and PFRDA was established in 2003. PFRDA develops and regulates the pension sector in India. Pension sector. Pension is the amount which is paid at the retirement of an employee. When the employee retires, a number of retirement benefits will be given. So for giving these retirement benefits, the government will deduct some amount while the person is in service. So when a person is doing the service, he is in job, he is working. So every month from his salary, some amount is deducted and deposited in Provident Fund or Pension Fund. And this will get accumulated along with interest. And the amount from Provident Fund, Pension Fund will be paid at the time of retirement. So that post-retirement period, the people should not face financial difficulties. Because after retirement, the earning capability will come down. So at that time, the people should not face any financial problems. So government has instituted one scheme, that is Provident Fund. So every month from the salary, some amount will be deducted by the employer and some amount will be contributed by the employer. The amount is invested in the Provident Fund throughout the service period. At the end, on retirement, the whole amount along with interest will be paid. So the National Pension Scheme, The National Pension Scheme NPS was launched in 2004 and with the aim to provide retirement benefit to all the citizens. So National Pension Scheme, this National Pension Scheme was established in 2004 so that the people can be able to get retirement benefits at the time of retirement. The objective of NPS is to set up pension reforms and inculcate the habit of saving for retirement amongst the citizens. Voluntarily, if the government says the people to save some money for the retirement, the people will not come forward voluntarily. So government has made it compulsory and explained to the people that what are the benefits you are going to get after retirement. So it will inculcate some habit of saving among the people. They will save while in service and at the time of retirement they will get the benefit. So these are the different regulatory bodies which regulate the financial markets. Inshallah, we will continue the next topic in the next video.